Hi, my name is AJ Bowen, and I'm a realtor here in the Houston and surrounding areas. I will be bringing information to you each week about real estate in short videos that will help motivate you to buy or sell your home and understand the process. I'll try to keep this to about 7 minutes. Today I'm talking about 3 steps toward your home loan. My friend Herman has asked me these questions, and I'm sure you also want to know how to prepare to buy a home. So let's get started. Step 1, your credit score. Herman asks, what kind of credit score do I need to have? Well, to answer this, you need to understand what is a credit score. If you don't have a credit score, that's simple. You haven't bought anything using credit. So you haven't tried to rent an apartment. You haven't tried to buy a car with credit terms. You haven't gotten any utility bills. Those things can all be changed once you establish those and you apply for that. So a credit score tells lenders about your credit worthiness. It shows how likely you are to pay back a loan. And based on your credit history, they give you the opportunity to do this. There are 3 credit bureaus that track this. There's Experian, Equifax, and TransUnion. And what they do is basically judge you on your spending habits, on your debt to income. All this information is put into the system, and then they come up with an understanding of this credit score. So on the low end, you can have a 300 credit score. On the high end, you can have an 850. 300 means you accumulate a lot of debt and you're not paying it off. 850 means you accumulate debt, but you're paying it off and you're keeping up with your credit score. And you're keeping up with your bills. However, you can qualify for a loan with as low as a 580 score. On average, a good credit score would be about a 670. When lenders request to review your credit report for the loan application process, that's called a hard inquiry, and that usually affects your credit score, but it's a necessary evil so that you can qualify for a loan. Herman asks, how do I get my credit score up? Okay, well, many variables as to how. So let's go to the next step and we'll come back to that question. So the next step is debt to income ratio. Your debt to income, which is DTI, compares how much you owe each month versus how much you earn. The reason why I'm giving you these little letters and abbreviations is because you will hear these a lot and then you'll be like, what is that? So now I'm telling you what it is so that you can understand it and be the smart person in this particular scenario. Okay? Specifically, it's the percentage of your gross monthly income before taxes that goes toward payments of your debt. So your debt to income ratio would be I make $6,000, but I have a $500 car payment. I have a $800 monthly apartment. I have utility bills. I have credit card bills. All these answer that question as to what is your debt to income ratio. Lenders like to see a DTI as low as 36%. And we'll go up to about a 50% DTI. And again, that depends on the program and what you're qualifying for loan-wise, which will again have different parameters. To understand this, again, you can add all this up yourself. Just put all your monthly bills in one number and then divide it by your gross income, again, before taxes, and you'll get that percentage. The lower the DTI, the more likely lenders are interested in you. Okay, so to get your credit score up, you must maintain your DTI by watching what you're buying and what you're spending. And if your DTI is high, work on paying down that debt. Okay, examples of doing the right thing is let's just give you an example of a 98-inch TV that you bought at $9,000, but your credit you bought on credit, it's $300 a month. I mean, that's a crazy interest rate, but again, $300 a month. Versus just buying a TV that's cost you $200 to $400. Maybe it's not as big. However, you don't need to have a life-size TV screen. You don't need things jumping out at you on the screen, right? So there would be a good scenario. Do I want to spend that money for my credit score, or do I need to spend that money? Okay. Another example is a car note. $60,000 car versus a $15,000 car. $800 payment versus $350 payment. If you think about your debt to income, you'll think about whether I want to do this or not. Again, do I need everybody to see how wonderful my car is, or would I rather show them my beautiful house that actually accumulates equity and goes up, whereas your car depreciates in value? So Herman asks, how do I get my DTI? Well, the answer is simple. Don't add to your debt. Stop buying things you don't need. If you don't need it, you don't have it. Okay, you will have more opportunities to get what's yours. Later, the first thing to do is get what's yours, which is get that house, get that equity, get things going on, and then you will see that after you get that, your credit score is going to stay up there because you accumulated good credit and you bought a home, which is a good line of credit, and all these things will be added. Okay? All right, the last step is your down payment. A down payment is a percentage of your home's purchase price that you pay up front when you close on a home. Okay, so what that is you buy a house, or you're trying to buy a house, but they want a certain amount of money to qualify for the loan. Why? Because they want to make sure that you have some kind of money that you've been saving. So usually they want 3 to 5%. You often save this money, and if you want to really be on top of it, you can get 10%, 20%. Again, that's not for everyone. Not everyone's able to do that. Okay, there are also down payment assistance programs, or DPAs, available. And those are usually with FHA loans. But to qualify for those, you at least have to have a 620 credit score and meet certain income requirements. Okay? There are different loans and lenders. And to get more specific information about these things, I would recommend you talk to a lender that you trust, or a realtor that you trust, or me. And I will help you, or we will all help you. Herman tells me it's hard, man. It's hard to save money with everything going on in my life. Okay. I can hear you. But you know what I say to that? I take a text from my wife and say, buckle up, buttercup. Okay? Life has its challenges, but with those challenges are options. Okay? The option is, do I want this? Do I need this? And do I have to have this? Okay, so no. You can make the right choices, and you'll be able to save that money if you make the right choices. All right, so let's go back to all this all over again. Let's summarize this. So step one, watch your credit score. Step two, keep the DTI down, debt to income, in case you forgot what that was, okay? Down payments are required to obtain a loan, and DPAs, which is down payment assistance, are available, but you must qualify, okay? So now let's go to the great scenario. Herman is very happy now. He's got his new home. He's sitting back and watching his equity build. Well, guess what that is? Okay, well, we'll find that out. We can do that in another video coming up. If you would like to contact me, my name is AJ Bowen, and you can reach me at 281-885-9602. As you see, it's usually displayed somewhere above my head. You can also reach me on my email address, which is ajrealtorhouston@gmail.com. Remember, anyone can have what they want, as long as they're willing to do the work, okay? All of my information here is provided in the notes, and again, feel free to reach out to me. And hey, have a great day.